So my stock portfolio as a 17-year-old kid is worth over $106,000, and I'm going to be teaching you in today's video how as a 17-year-old kid, I grew solely just my stock portfolio in under a year to over $100,000, and I was given zero money to do so. I'm going to break down how I got the money initially to invest and my entire portfolio on my phone, so make sure you watch the end of the video. But if you guys don't know me, my name is Carterescapulebiz, and I post videos just like this all the time on my channel. So if you guys enjoy this type of video, like the video and subscribe to my channel right now if you guys want to learn more about how I make all the money I do and how I invest it in today's video. But let's just dive in right now. I'm going to be doing an entire breakdown of how I like to split up my monthly income and diversify into different safer investments. So as you can see, we're on my investment app right here, and my total portfolio value is $106,961.76, and it's up $97 today, but I'm filming this on a Saturday, so that's not even relevant because the stock market is obviously closed today. If we go to this area, I can see the exact change, and I'm able to track most of the stocks that I'm invested in. Given I don't check this that frequently because all of the stocks that I invest in are more long-term stocks. If I'm doing short-term investments, it's normally something like crypto, but long-term investments, I almost always do something like stocks. So let's do a breakdown of how I invest my money. So if you are new to this whole stock market thing, especially if you're young, the safest type of investments are index funds, which is a bunch of different companies pooled into one. The biggest example is the S&P 500, but all these companies basically pool into one. So instead of investing into one company, such as like Apple, you're able to invest in a big variety of companies, like, for example, the S&P 500, which is 500 companies together put into an index fund. And now, I invest in specifically Fidelity index funds because that's just the investment platform that I use. But obviously, you can use your own investment platform, whatever you're doing, depending on whatever age you are. I use Fidelity because I'm able to use it under 18 if I have it linked to my parents' account. But once you're 18, you can use whatever you want. There's no guidelines past the age of 18. So as you can see, the main index fund that I actually invest in is this one right here called FNILX. And personally, in the last year, I've gained almost $7,000 from putting in around $22,000, which I know most likely none of you probably have $22,000 to put in, but that rate of return in a year is actually crazy. And the average rate of return on an index fund is around 7 to 10%, I believe. So this is what I recommend for the largest portion of your money. So what I like to do is, for my long-term investments, you can make up whatever percentage works for you, especially if you're younger and you're working just a part-time job. You can start with smaller percentages of money. But for me, since I'm young and I make a decent amount of money alone from the other businesses that I run, I try to invest and save most of my money, which I usually do more investing because this type of investing is basically saving because of the fact that it's so long-term and just overall the course of history, it's always gone up versus individual stocks. So most type of long-term investment like this is what I usually do to save my money. As you can see, between the three index funds, I have over $80,000 invested. That makes up the largest pie of my investments. Once you decide what percentage of your income that you'd like to set aside to invest for your future, so if you only make $1,000 a month working a part-time job, even though this does seem like a lot, but if you don't need all that money at the time, 25% is a decent amount. You can put $250 into the market every single month. Just Google compound interest calculator, and the difference between starting now at 18 and starting in 12 years from now when you're 30 is actually insane. You guys do not understand. Like, for example, I'm on this compound interest calculator right here. Now, let's say you have an initial investment of $500, and like I said, you put $250 a month in. Length of time, let's just say you've done this consistently throughout your life for 30 years, and estimated interest rate, you can just say 7% for example. I'm just gonna say like 2% there. This is not obviously like down to exactly what it's gonna be, but then you just click on calculate, and you can see just from investing $250 a month in 30 years, your money will compound to $287,000. This is literally just a couple $1,000s a year. So you literally triple and quadruple your money right here, as you can see, and it compounds. So over time, it basically snowballs. Now, those are the best type of long-term investments. Now that you have your hypothetical $250 a month down, I recommend you put $200 of that $250 a month into some sort of index fund. It really does not matter which index fund you do, and there is things online where you can make your own index funds as well, but I don't believe that I know enough about the stock market personally to make my own index fund, so I like to trust things like this because they're overall usually correct. And then you're probably wondering, what am I doing with that other $50? Well, that other $50 can be used to invest in individual stocks. So if you guys look at my screen right here, as you can see, I'm invested in Apple, Amazon. I have one share of Dollar General, which I'll get into that later. I have some shares of Disney. I have shares of Meta, Microsoft, and Tesla, so basically the big companies that control the world. Now, the Dollar General one was just like a random investment that I did for fun, but the rest of these are long-term investments that I do. For example, if you just click on Apple alone, I've gained $670 on my, what was most likely an $1,800 investment. So overall, I've not lost any money on any of these besides any of the ones I've done for fun. Like Tesla, up $800. Meta, I'm up $3,000. So I started off, just for example, on Meta, I put in around $2,000 in total, and then now it's worth over $5,000, which is kind of crazy to think about, and this has all been within the past year. As you can see, if you go to the chart here, I started investing a little bit in 2023, but most of my investments started in 2024, and as you can see, my portfolio slowly grew to over $100,000, and it's kind of just sat around that mark now, because I have not been recently putting money into this. I've been putting money into other businesses, but just overall, you can see all my money has completely gone up over time. If you only pay attention to short-term stuff, you're going to see this money has not changed yet. I've not put in any more money or taken any out, but as you can see, it fluctuates by about $1,000 a day. When you're doing stuff with investments, you cannot focus on the day-to-day. There's been so many times where I've loaded up and it said I've down $5,000 on the day. If I would have just panic sold right there, I would have missed out on tens of thousands of dollars of profit. At this rate of the amount of money I'm putting in, with the typical rate of returns, it's estimated that I'll have a couple $1,000,000 in my portfolio by the time I'm 30, which is something some people don't even have by the time they're retired. So start now investing young, because trust me, you will not regret it. That couple $100 a month you're putting into the side every single month for your future, trust me, it will pay off in the long run. You don't always need to buy the newest pair of shoes or anything like that. I don't buy anything like fancy, like watches or any jewelry or anything like that, or clothes, unless I'm put money aside for myself, for my future, such as the long-term investments that I do. So that's an overall breakdown exactly how I recommend that you invest your money as a teenager. Obviously, once you get older and above the age of 18, you can start investing in things like Roth IRAs for retirement, but this is specifically for people between the ages of 13 and 18 who want to get started investing early, because they see so many people talking about investments, but they have no idea how to get started. This video is for you. If you guys did enjoy this video, make sure you like the video and subscribe. If you guys want to know how I make all the money I do, because stock investing is just a side thing for me, then tap one of these videos on the screen right now to see exactly how I run my businesses. Enjoy, and I'll see you guys in the next video. Peace.